Differences between provisions and reserves. Provisions versus reserves. Provisions is the portion set aside for meeting known liabilities or expenses whose probability is certain. Whereas, reserves is the portion set aside from the company's profits to meet an unforeseen business event. The nature of provisions is based on a charge against profits, which means that they are created even if there is no profit. Whereas, the nature of reserves is based on appropriation of profits, which means that they are only created when the company is profitable. Provisions are always made for a defined liability or expense. Whereas, reserves may or may not be made for a defined purpose. Example, debenture redemption reserve or general reserve. Provisions are created to meet a specific liability and fulfill the requirement of the law. Whereas, reserves are made to give strength to the financial position of the company. Provisions is created by debiting profit and loss account. Whereas, reserves is created by debiting profit and loss appropriation account. Provision is mandatory to create provisions as per various laws. Whereas, reserve is not mandatory to create reserves. They are only created when the company has surplus profits. Dividends cannot be paid from provisions. Whereas, dividends can be declared and paid from reserves to the shareholders. They are always shown on the liabilities side as a current liability or reduced from the concerned asset for which it is made. Whereas, reserves are shown under the head of reserve and surplus as the owner's capital or shareholders' fund in retained earnings on the liability side of the balance sheet. The amount of provision can never be invested outside the business. Whereas, the amount of reserve can be invested outside the business, as in case of debenture redemption reserve investment. Provisions can only be used for the specific purpose for which they are created. Whereas, reserves can be used to meet any unknown loss or liability. Presence of profit is not necessary for allocation of provisions. Whereas, presence of profit is necessary for allocation of reserve. Example of provisions are provision for depreciation, provision for bad debts and taxes. Whereas, example of reserves are capital reserve and revenue reserve. Kindly subscribe my YouTube channel Thesis Helper. Thanks for watching.